Hey there, welcome to the channel. So today was, oh gosh, nice day in the stock market today. So yeah, so wanted to just go over that, see what kind of happened today. Now, let's look at something here. Let's look at the start by the S&P, all right? Let's look at the SPY. So, you know, as I was talking about in one of my earlier videos, I was like, hey, we had this problem where the NASDAQ had been selling off for the last couple of weeks. And then even before that, we had like the high beta stuff like the NEOs of the world just selling off for several months. I mean, they've sold off from highs and they really just have struggled and really not been able to make it back above. And so you have these which were previously high flying stocks have just kind of gotten the crap kicked out of them. Yeah. So like I was talking earlier, what I was pointing out is that, sometimes you have a certain part of the market that will outperform another part of the market. And especially when it comes to a sell-off. So like in this case, you had the SPY, this whole period of time has just been kind of, it's been hanging out. It's been doing pretty good. It had this little correction here, but it's been pretty much hanging in there. Has not been getting the crap kicked out of it, right? And then, like I had pointed out, I believe last week, I pointed out that, hey, we had this big down day here. And so I was kind of thinking like, well, oops, is it kind of like starting to bleed over? This selling in these high beta stocks, hey, is it bleeding over to the major market indices? And, based on what we had today, it looks like it is. So now what happened today is, on the SPY kind of bounced off the 50-day moving average. Yeah, so the red line is the 50-day moving average. Just bounced off it a little bit, but, down like a solid 2%. So it basically, it looks like, we're kind of heading for a correction here. And so the QQQs, what did they do? The NASDAQ, sold off today 2.5%. But so your NASDAQ getting the crap kicked out of it, your S&P finally, the selling has reached into there, and then the Dow Jones Industrials, the selling reached into that as well. So I guess what was going on? So what really happened is, as far as I can tell, as far as anyone can tell, what's happening. We had the consumer price index come out, and basically there was a lot of inflation here. If you look at it and look at this report, there was a 0.8% increase, and that's month over month in April. So from March to April, 0.8%. Now, if you wanted to, I mean, that's like a lot. So if you wanted to basically calculate, what kind of an annual inflation rate does that imply, then what you could do is multiply that by 12. So that implies a 9.6% annual inflation rate. Okay, so let's do this for a minute. So what we're saying is in 1 month, the prices, the overall urban prices went up 0.8%, right? So that's what they're saying, okay? And if we took that and we times that by 12 to annualize it, then what do we get? That implies 9.6% inflation. Okay, so that is extremely high inflation. Now, they also give us the year over year. So for the last 12 months, what they're telling us, but yeah, so the 12 month, it was 4.9%. So basically you have to understand they're measuring this different ways. And so they're saying, basically year over year, 4.9% inflation rate. And then if you look at the monthly, it's like potentially, a much higher rate. Now, generally, that's kind of been a very high type of high inflation. So for that to maintain is, that probably is unlikely. So that's why I don't think people are really worried that, oh my gosh, we're seeing nearly 10% inflation. Now, we did see 10% in used cars and trucks for who knows, for whatever reason. But you can see that we're in this inflation here. And what's going on is they call this the base effect. So what they're saying is that, hey, look, back here in the pandemic, for whatever reason, you know, we had a deflationary bout. So basically the prices of things went down, which is kind of surprising thinking back. I don't remember the prices of things dropping. I don't know why that really is, but as far as they measured it, it is. So now if you come over here and you're measuring it, you're year over year, you're comparing it to an abnormally low inflation, right? So basically because inflation dropped. So that's what they call the base effect. So the base effect is that, hey, you have this extra inflation. So that's why we expect it to be high. And then over time, that dip should normalize out. So these dips are pretty rare, right? And so overall, you just have this increase in prices, and it should just kind of return to that. But so based on this, I guess the market, once again, I kind of point out in terms of it's all speculation. I guess enough of the market thought that, hey, this is highly inflationary. It's more inflation than we expected, and they sold off. And one of the things that happened, interesting here, is the yield spike on the 10-year. So if the yields went up, right? So the yields went up, so they sold off the bonds. That's what it means. So it's an inverse. So the price of the bonds went down. They sold bonds. And that's a big move. That's a 4% move in the yield on the 10-year. That's a huge move. So they sold bonds today. As a matter of fact, they broke above this resistance here. So, I mean, if you look at this chart, you're looking at a setup to go higher. So now we're looking at a setup on the yield in the 10-year to go higher for sure, right? Because, now you put this in and, you came up the moving average, and now you've broken out of this resistance. Now we have a lot of resistance over here, but now you're going to make a run at it. So higher yields. So it's interesting. So if you look at it, that means they sold off bonds. They sold bonds, and at the same time they sold stocks. So they sold everything. So that's kind of that's pretty interesting. So it was a pretty bloody day. It depends, I think where you were and what how you were situated. So the Nasdaq. Let's look at the 10-year. So in the long term, the 10-year, is now in this resistance zone. So we'll see. It hasn't broken out, but somewhere around 1.9 to 2%. If it gets above there, it's kind of breaking out. And then if we wanted to look further back, is try to get a feel for like where it would maybe stall out. So you can see that like we're right in this range, 1.5 to 2%. You can see that we have this resistance here to higher rates. There actually is a lot of more resistance here, because we traded in a range for several years between 2% and 3% here. Well, 3% for just a little period of time. But yeah, so if we break out of there, then, there's actually resistance all along there. So yeah, so that's kind of interesting. And then what happened to the dollar today? So the dollar in the short-term chart, dollar really went up today. Don't know why it went up, but it did go up. And then so we look at some of the high beta. So the ARK fund had, and I didn't do a video yesterday, but I was going to do a video. So I'll just talk about it really quick here. So today it was down. It's sort of just a nothing day. So this is today's bar. It's kind of like, okay, it's in the previous day's range. So nothing much happened. But I want to point out what happened the 2 days before. So we have these two bars here, right? So this bar was a down day. So that this red bar means it opened here and it closed here. So you can imagine that on that day, it was something like it did something like this and closed near the low of the day because there's no tails. And then the next day, we actually gap up. Let's see. No, we actually gap down. I'm sorry. This is a open bar, so it's going to be a rising. So this actually is your open down here, and your close is up here. So this is actually a strong rising day. But now the thing is, it's piercing. It's called a piercing pattern. It's piercing into the previous negative day. So first of all, we have a trend, right? So we have this downtrend in the short term, right? But over the last week or so, or 2 weeks, you have a downtrend in the ARK investment, right? So when you have a downtrend and you see that you have a strong selling day, followed by a day that actually reverses and pierces into it, meaning that the close is into the range of the previous day. So this would be like day one, you had something like this, right? It kind of did that. And then the next day, it actually got worse. It gapped and it went down here. But then somewhere in there, it actually rallied up to the close of that day, right? So it rallied up to close higher, and actually, so this would be the range of the day there, right? And so I want to erase this guy. Okay, and we're going to put this guy back on here. So yeah, so it came down. Oh my gosh, do what I want you to do, stupid thing. Oh my goodness, sorry. Okay, yeah, so it gapped down, and then it went up, and it closed somewhere in that part of the day. So you basically have your bar here from that day, and that was a solid bar, and then this goes to here, so you get this open bar. So it's called a piercing, so it's kind of a bullish kind of pattern. But as you can see here, it didn't really play out, right? Because so for this to confirm, I mean, it really needs to like trade above the high of the previous day that it pierced, right? So it didn't really do that. So this is another one of these things. We're kind of in a downtrend. The market's kind of crappy on a lot of this stuff, and you see these little tiny signals that just don't really play out at all. Okay, and we'll turn that off. And let's see. So yeah, so interesting. Like CCI, like nothing really happened there. 3.5. Like in some ways, some of this, the high beta stuff is kind of arresting the fall today. It didn't go down. I mean, like for this stuff to be down 4%, that's not really a bad day for them, considering you'd had 10% lost days, and even like GameStop not doing anything. Neo, what happened to Neo? See, Neo. See, the thing is down 3.4%, but not really. I mean, it's just it's a nothing day. It's traded within the previous day, so it's kind of not a really that bad of a day for those. And then your Tesla, Tesla here. See, this is a case where you had the really bad day here, recovered here, but didn't even make it into that. And then today it actually, so today on Tesla was actually worse, right? Because it put in a new low. It was not an inside bar, right? So this today's trading rate range was outside and closed below the low of the previous day. So Tesla continued to get worse. And then USO doing nothing. So I guess, and then my consumer staples, they got to this. So they got to everything, right? They basically got to the wider market. So now, my stuff, I'm hurting in that as well. So I have some kind of hedges on there. And so if I look at the question's going to be is, are these hedges really working well? Probably not. They're probably not balanced well enough. So you can see like this guy here is, let's see. Yeah, so some of this, so this looks okay. It looks like it's responding the way I want. So this pro function ultra short-term VIX. So basically we saw the volatility spike up. So we did get a move. So we got a 26% positive move. So like in this case, this is my 26%, but it's a very small proportion of my portfolio. Now I think I've made a mistake because I didn't rebalance. I needed to put more money in to properly hedge. So I lost money today. And I probably lost more than I should have, because as this thing, when I bought it here, so let me try to explain this hedge, which is not a great hedge, but I bought the thing here, right? And I'm well aware that it has got a negative carry, so it's dropping. Now, when there is sell-offs in the market, it does respond a little bit. So now here it's actually responding pretty well, so that's really cool. But the problem is this value, which I've lost 80% on this hedge, is I probably periodically I should have like had it. I needed to put more in. I needed to buy more of it, so I had the proper amount. So right now I've got a 26% move on this thing, but it's such a tiny portion of my portfolio. It's like this little, yeah. So in terms of like a pie, I have my other stuff. It's like this little tiny sliver, of the pie, basically. And so it's that little tiny sliver. So it's not, even though it had a good move, it's not giving me the protection that I need right now. So I'm not sure what to do about that. I think I'm not going to do anything about it, because the problem is it's already too late. This is psychology. Like I've already made the mistake. I should have periodically put a little more in to keep the balance in terms of the position size of my hedge relative to the size of the portfolio. I should have maintained that, but I didn't really maintain it. So now my hedge dropped down to being smaller than it needed to be to offer the protection that I wanted. So I think that's it for the stock market today. I was looking at copper too. It's top copper. Yeah. But so basically in conclusion, I mean, it looked like, higher inflation than the market expected. The plan is that it's transitory. And if you just look at this chart, so here's the CPI. So the CPI here is a number. And so when they report the number, they're taking, if the 12-month, they take the point here, determine how much it changed from the value 12 months ago, and then they give you the percentage. So like we got 4.2% annual inflation rate. Now, a lot of it was in weird things like cars and stuff. And right now, because we're reporting April and we had this dip, they're calling it base effect. So they hope that it will be transitory. But the question is it going to be transitory? I don't know. There seems to be confusion here. And the confusion, is like, can you do what you've done and get away with it? So what I want to do is I'm just going to go over here for a minute. So I guess the way, the market, if you look at what happened to the market could have overreacted today, right? But the other thing is you can look at the market and say the market doesn't believe it. Based on the inflation that the market saw, the market is not believing that it's transitory, or the market believes that, well, maybe it is transitory, but it's going to be a much higher spike in inflation than originally thought. So, it seems like they're not really buying what the Fed is selling. That's kind of what it is. And notice how, remember I had commented on one of these videos, and there was a study, and the Meet Kevin guy had it, and I don't know where it is, but there was, these professional economists, they surveyed them on how, they think inflation is going to be. And pretty much when you do those surveys, it's like, yeah, they expect inflation to be transitory. They don't expect it to be very high for very long. And that's the experts. But then, then there's a study just asking average Joe people, like, are you concerned about inflation or somewhat concerned? And suddenly in that particular one, talking to average Joes, like 75% of people, at least at that moment in time, are like concerned about inflation. So the question is which matters. And of course, the reality is the opinions of the experts don't matter. It's what people are actually going to do that matters. That's the thing that matters. So when you're looking at things like cars right now, cars went up in that CPI 10%. Why did they go up 10%? I mean, who knows? There's just not enough cars. I mean, I don't know. I assume a few things. I assume one, that like, we have had some shortages of newer cars, but the other thing is new cars are very expensive. I don't know who can afford them. And I can tell you from my experience, I'm kind of frustrated with cars because I have a car and it's like, okay, it's getting older, needs some work, and I'm not done paying for it. And so very often, like, you cannot expect a car to last 10 years. So if you're doing 10-year financing, I mean, it's like, it's not a good thing. So I don't know. I mean, imagine that most people just don't think about it, but I imagine there are enough people that think about it and say, hey, look, they buy a new car every 10 years or something, and they're happy that they get a 5-year loan and they have maybe 5 years where they're not making a car payment, and that improves their finances. And then they like, okay, well, now I saved up some money and my finances are better. And then they go buy a new car. Right. But now, since the price of the cars are so high and they're financing at 7 years, 8 years, 10 years, I've even heard of even higher, maybe people are just turned off and don't want to buy the cars. And given the fact that if, it's true that they have these kind of shortages of chips right now in the cars and for the automakers, and they're not making as many, I mean, that could be. But the other thing is the cost. I mean, I just don't know how people can afford to buy a new car right now. I mean, obviously, one of the things that you can do is you just lease it, right? You just lease the car. But, from my perspective, I mean, that's kind of a treadmill. That's a dangerous treadmill because you never get off that treadmill. Like, you always are like, okay, 2 years, the lease is up, whoops, you got to get another one. You got to get another one. So you're on this treadmill of forever paying for a car. At least if you have a model where you buy a car that you can actually afford and you pay it off in 5 years, and you buy a good quality car that you get 7 to 8 years, you can live with it, right? The car, if it keeps running and is okay, and sure, it's a little worn out, but you don't really care, then it's like you get this model where, it's really nice to not have a car payment. So I don't know if that's factoring into this. So, are new cars, are people just not considering the new cars because they're too expensive and they're piling up trying to get the um, used cars? Who knows? It's really hard to say. But that was one of the major areas. And of course, this is the thing that people point out. It's like, well, if you take out cars, then there wasn't as much inflation. And yeah, sure, that's true. But, um, I don't know. I really don't know. So, that's really the debate. And so I guess when you have a day like this, it's kind of just sort of tells you that, hey, the market maybe is not believing the Fed here. And, the other thing too is because the tax changes, so Biden has different tax changes they're proposed. And if they come out, basically higher taxes, especially on capital gains, that's going to have a huge effect. I don't know how you handle those different things, but you have to do tax loss harvesting and, if you have gains, so you have to figure that all out. But the net result of that is that it tends to promote shorter term thinking. So if you're going to have, so basically, even let's say you are up like 100% on one stock, and then and you're down on some other stocks. Well, and you want to protect your gains, then you probably do some selling, right? Because you're going to sell. Maybe you're going to lock in the gain. Maybe you still, if you're sitting there in like a Tesla, it still had a big move, even though it's corrected lately. You still may have a lot of profits there. So maybe you're like, look, I want to lock in the profit. So you sell that, but then you have a profit. And so then you're going to sell some other stuff that you have losses in because why? Because you need to, get some losses so you don't have to pay as much taxes. So I think that kind of uncertainty is going to play into it as well. So, I don't know. I don't know if we get inflation or whatever, but I think there's all I can say is there's a big picture here. And the big picture is that, if we really could just give everyone, stimulus checks of $5,000, $6,000, 3,000, 2,000, whatever, any number. And we could just you can smell that, basically UBI is coming, right? You can smell that like they want to do UBI, right? Because it's control. And a funny thing is, apparently the guy, the governor of California, Newsom, who is facing a recall election. What is he now proposing? $600 stimulus checks for Californians. Like, really? Are you kidding? Is that such an obvious, like, literally, like, okay, I don't want to get recalled and everyone's pissed at me, so what am I going to do about it? I'll just send them money. It's such a blatant, it's just a blatant, like, send people money. It's bread and circuits. We're going to distract you and we're just going to print money and send it to you so that you don't vote me out of office. It's just unbelievable. So so that's the question: is it going to be inflation or deflation? Is it going to be? So right now the market says no. But so looking at those stocks, like I had talked about, like, yeah, definitely I'm looking for setups now. So now we're in a mode where it's like, look, kind of protect yourself, do what you need to do to protect yourself. But now we're looking for the opportunities, because when you look at those charts, like, hey, we didn't even break the major averages yet. I'm sorry, major moving averages. So, you like you're talking about, like, it bounced off the 50-day. Well, okay, the 50-day, that's no big deal. It's really no big deal. So I think that, in terms of this at this point is a minor league, correction. And that's good. It's good in the long term. So it's a time to be looking for opportunities. And maybe it's going to be that time to look for opportunities in these, high beta space, electric vehicle space, et cetera. There could be good opportunities, but I won't go into that stuff unless there's some technical setup. We have to have bases that we break out of. We have to have that stuff. If we don't have it, I'm not gonna buy it just because I do a spreadsheet with that shows some numbers. It's like you have to have something to kind of hang your hat on. The only thing to hang your hat on is like technicals in my mind. I mean, it's best to include both. But yeah, so I think there's definitely, opportunities, and that's something to keep in mind too. Is like this, a 2% sell off, or like on the major indices, it's like 4%, not even 5%, I think, at this point for most of the major indices. So that's not a big sell-off. So if you're sitting there and you're getting cleaned out and you're down 20%, 30%, and the market only went down 2% major indices, then you got to start asking some tough questions here. You really have to ask some tough questions about what you're doing. And if you're following people that that's what they're putting you in, and you're following them. I mean, I just asked the question, why are you, just it's a really tough one. I don't know. I think that you have to, if you're in the really high beta space, you got to get more technical about it, because you have stuff that moves so much that you got to try to, you always have to be taking profits. You always have to be, controlling when you put risk on and when you take it off, because there's so much risk there with a lot of these guys, the Neos of the world, even the Teslas of the world. And then one more thing that I'll comment on is, so apparently this evening, Elon Musk announced that they're not going to accept Bitcoin for Tesla is not going to accept Bitcoin for purchasing cars. And, it's really, in this is definitely, and the reason is his excuse is like, hey, look, it's environmentally poor because, it's not good for the environment because it uses so much energy. Now, one thing in there in those articles that you read is like, yeah, I was kind of surprised how much energy it does take to mine a Bitcoin. It takes like, depending on the numbers, the same amount of energy, 707 kilowatt hours or something like that. That's a lot of energy. You could run 20 houses for a month or something like that. You can look at what those numbers are. So it's a lot of energy. And I mean, that makes sense because it's a proof of work, right? It's like, hey, that's the whole thing. That's the whole thing also behind security. Security is that, you want to set something up where it's like, hey, if you configure, I mean, the way it works is like, look, you can always crack a system. You just want to make it so that it's so much time and effort to crack a system that it costs more in time, energy, and money than what you get for cracking the system. That's sort of the idea behind the cryptography and stuff. So in a way that makes sense. But of course, now he comes up with this excuse like, I don't know. It's like, didn't you already know this? Didn't you already know that? Yeah, sure. If some of the Bitcoins are being mined in China, and sure, China's using coal. They use coal. I mean, watch some ADV videos, ADV China videos. Yeah, they use coal, a lot of it. So it's like, okay, so if that bothers you, okay, fine. It didn't bother you before? I just don't understand. It's like, didn't you know that before you decided to buy some Bitcoin? As not only that, accepting it, you were Tesla was buying some Bitcoin to hold as a reserve asset. Instead of being in all cash or treasuries, they're going to be like, oh, we're going to have some Bitcoin, and they supposedly had bought some. But the problem is the volatility, right? So this all just smells of like him just kind of covering his butt. I mean, I would not be surprised if like his accounting people, his CFO is like, hey, do you know that based on the Bitcoin we have, we're going to have to write off $10 million of cash is going to have to be written down by $10 million, because remember, if they have Bitcoin, they're going to have to mark that to market like every quarter. They're going to have to mark it. So it's important to consider that. So I wonder, like, I don't know if they're selling that or not, but I wonder if like finally it's becoming apparent, because we have had some sell off in Bitcoin that maybe his CFO has finally convinced him that like, hey, you got to be a little bit careful here, because if you have enough Bitcoin, you have to write off $10 million because the Bitcoin moved down in value. Remember, and they have to do it unrealized, right? They have to account for what they believe it is. So when it happens, they have to write it off, even if they don't sell it, even if they're just sitting on it. It's not like how you do our taxes. Like when we do taxes, we do for like personal, we do cash based, but they have to do accrual based. And what that means is like, if I didn't sell the Bitcoin, I don't have to take a loss, or I don't have to report a gain, but they have to report the gain or loss. They have to accrue for whatever the best estimate of a loss or gain was. So I wonder if finally his CFO kind of woke him up to the fact that, hey, you're going to add some volatility to our earnings based on what's happening with Bitcoin. And so, and maybe people were using Bitcoin to buy some cars and they were piling up more Bitcoin than they want. I guess the real test is going to be like, how much Bitcoin do they have now? And checking the reports and seeing after the next quarterly report how much they have then, to find out if they actually sold some Bitcoin. But because that might be the case. Maybe they sold some Bitcoin. It wouldn't surprise me. But to say that, like, how did he not know that it was costing a lot of energy to mine Bitcoins? I just don't buy it. So it sort of strikes me as an excuse. It's just an excuse. And so it is kind of amazing what Elon Musk gets away with. I mean, he's an amazing guy. I mean, the stuff he's doing is like cool. I mean, to be like you actually would start a new auto company is kind of amazing thing. When he started it, it's like you would think that would be the stupidest thing ever, but really it's not. And they've accomplished a lot. And then also what he's done with space, et cetera, et cetera. So more power to him that way. But he's got to grow up a little bit. I mean, just it's really the SEC. The SEC has to grow a pair and like just hold them to be accountable like everyone else. But we'll see. So yeah, so that was it. So I don't know. I assume that today was like excessive selling, so I'd expect some kind of recovery tomorrow. But that's it for this one. So talk to you later. Bye.